Governor of the Central Bank of Sri Lanka, Dr. Nandalal Veerasinghe, members of the Governing Board and the Monetary Policy Board, Deputy Governors, Assistant Governors, and senior officials of the Central Bank of Sri Lanka, distinguished invitees, ladies and gentlemen. A very good morning to you all, and a warm wish for happiness and prosperity this new year. Welcome to this gracious flagship event, the Central Bank's annual policy statement for the year 2024, where the Central Bank unveils its future policy plans and direction that will shape the monetary and financial landscape of our nation, charting the course for Sri Lanka's economic recovery and sustained growth. As you are all aware, Sri Lanka encountered unprecedented economic challenges over the past few years, which underscored the need for bold and strategic measures to not only rebuild, but also to fortify our economic foundations. Recognizing and being cognizant of the necessity to forge a path towards sustainability, stability, and resilience, the Central Bank of Sri Lanka, with the support of the government, embarked on an ambitious reform agenda to rapidly restore macroeconomic stability. This year's annual policy statement reflects the meticulous collaboration between the Central Bank of Sri Lanka and its stakeholders, driven by their commitment to bring about a sustainable recovery that benefits all citizens. These policies are shaped by intensive internal strategic planning, constructive deliberations at the decision-making boards, both the Governing Board and the Monetary Policy Board, and extensive consultation with external stakeholders, some of whom who are present in the audience today. Before we proceed, please be informed that the Governor's statement will be followed by a Q&A session, which will be open for everyone in the audience, so that we can set forth on this endeavor with greater unanimity of understanding. So without further ado, allow me to invite Governor of the Central Bank of Sri Lanka, Dr. Nandalal Veerasinghe, to present the Central Bank's annual policy statement for 2024. Over to you, sir.
Good morning. Thank you, Dr. Pereira, for that introduction, the Director of Economic Research, who may deliver the introduction. So today, the launch of what we call Statement on Monetary and Financial Sector Policies for 2024 and beyond, which is the usual annual event, what we are planning to do today. I'll make a brief statement highlighting only the summary of the statement that we are going to issue, and the official full statement I think will be issued to the media soon after my delivery of the presentation. So my presentation will certainly be, there are two parts. First, briefly, first part I would try to cover the economic performance in 2023 briefly, because this is a story that we all are familiar, so I can do it quickly. And then most important part is to focus on the our plan for 2024 with some details of each and every sector that we are basically responsible in terms of policies and measures. So to start with, we all know the economy, Sri Lankan economy started showing signs of gradual recovery in 2023, especially during the latter part of last year. The positive economic growth, obviously actual data available now, Q3, recorded first time after 6 quarters of negative growth, the positive 1.6% growth in Q3, and then we hope Q4, that trend will continue. In Q4 of 2023, data will be soon out, compiled by Department of Census. And also, we hope that trend will continue. And next, the inflation, which is our key objective, maintaining economic and price stability, which is price stability is a major objective of the central bank, especially under the new act, where we have a responsibility to maintain inflation around 4 to 6%. But in last year, we were able to bring down the inflation from a very high level of 70% that prevailed in September 2022, and then it was brought down to almost 1% within 12 months period, and gradually it has now slowly picking up and settling around 4% by end of last year. So this the shift disinflation process was obviously supported by an array of policy measures. Those are implemented by both the central bank and as well as the government. Meanwhile, the underlying inflation that we measure as core inflation, which reflects the demand pressures of the economy, also recorded a steady deflation during 2023 throughout the year right from the beginning. Then one other important part is inflation expectations, which is the important one in inflation targeting regime to anchor inflation expectations. That we are seeing inflation expectations have been very well anchored in terms of inflation expectation surveys that we conduct, and we have seen due to extensive policy measures aimed at restoring confidence and stability in the economy, although in some are very painful in the near term. These policies have helped stabilize inflation expectations, which is the most important anchor for inflation. So we were able to maintain inflation around 5% inflation expectation anchored around this, our target level. So the credible deceleration of inflation and well-anchored inflation expectation within the target range allow the central bank, as you all know, started to ease the monetary policy cycle from mid of 2023, much earlier than a lot of people thought that we were the period that commenced the relaxation or turn around the monetary policy stance that we had earlier. So this the relaxation was based on a few factors. First, as we all know, deceleration of inflation and the anchored inflation expectations, and also forward-looking inflation, stable inflation outlook, and also some improvements we have observed in the external sector in terms of exchange rate stability as well as the building up of foreign reserves. As a result of the monetary policy easing measures, administrative measures, some of the administrative measures and market rates were relaxed, and market rates declined significantly. So firstly, we all know the bankers' first reduction were coming from deposit interest rates, and then market yielding rates also declined, albeit at a slower pace, partly contributed to rigidity in the yield of government securities amidst high risk premium. So part of the reason why lending rates were not coming as fast as deposit rates, mainly due to yield on government securities have not been coming down due to some of the uncertain risk premium, which is associated with some of the uncertainties in debt restructuring in our view. So other important, the landmark, the enactment of new Central Bank Act, which conferred independence of Central Bank with improved clarity of policy priorities and enhanced public accountability of the Central Bank in line with international best practice. So this is last year was a landmark year for the Central Bank because we were able to get the new Central Bank Act after almost 74 years of the previous Monroe Act. With the enactment of the CBA, Central Bank Act, flexible inflation targeting, what we call FIT, which aims at maintaining headline inflation at prescribed target rate over the medium term while supporting the economy to reach its potential growth level, was formally recognized as a monetary policy framework of the central bank, complemented by, we all know now, flexible exchange rate policy in this monetary policy framework. While increasing the autonomy of the central bank Act enhanced accountability of the central bank in relation to its policy action. So we are now much more accountable for what we do. This is part of that accountability. We try to explain our policy actions and future course of actions in a much more transparent manner. As required by the FIT framework, monetary policy framework agreement As you know, earlier we never had the agreement from the government. We had our own inflation target, but now we are bound by an agreement signed between the Minister of Finance and the central bank to maintain Colombo consumer price-based quarterly headline inflation at 5%, subject to a tolerance level of plus or minus 2%, which means plus 7 and 3% broadly within that range, but with a target of a middle level of 5% over a medium term. The independence afforded to the central bank through the CBA is primarily through its limitations on monetary financing, and we all know on the new act there are limitations on the monetary financing by the direct monetary financing by the central bank, and the elimination of government representation in the decision-making bodies of the central bank, both governing board and the monetary policy board. Further, creation of a separate decision-making body, namely the monetary policy board, focusing more on monetary policy function, which is a key objective of price stability. In addition to the governing board, underscores the importance of independent monetary policy making for achieving domestic price stability by way of a new legislation that we have now. Accordingly, the establishment of such clear legal and institutional frameworks strengthens the monetary policy formulation process as well as the overall governance of the central bank. Now, just let's focus me on the external sector, what happened last year, because we had a lot of issues last couple of years because we were going through a severe balance of payment crisis. Year 2023 demonstrated the Sri Lanka's resilience and stability of having largely restored external sector stability, supported by improved foreign exchange inflows. So that's another good achievement for last year, because we were going through a very difficult foreign exchange situation in the past, especially from 2021 and 2022 onwards. This reinforced balance of payment position and facilitated the organic build-up of international resources. Now we have over $4.4 billion, thereby strengthening the Sri Lankan rupee. GOR, gross official resource, as I said, improved 4.4 billion by end of 2023. Such rapid build-up of gross official resource was primarily due to sizable net foreign forex purchases, foreign exchange purchases by the central bank, historical highest amount of foreign exchange reserves were bought by the central bank during 2023. In addition, government receives 2 tranches under the IMF arrangement. This further enhanced the support, and also further budget support from the World Bank and ADB program. The budget support also helped us to build both official resources to a level that basically was higher than what was expected later. Another important one is the external current account deficit, which is the key macro variable from the external side. Our difference between foreign exchange earnings and expenditure. So last year, we were able to record a surplus in the external current account balance for a long period, reflecting the impact of a notable improvement in mainly coming from the worker remittances, and also recovery of earnings from the tourism, and some of the inflows to the service account interests of ICT, port-related other service sector, amidst a relatively modest trade deficit due to compressed import activity. So trade deficit also there is an improvement, partly due to compress some of the restriction on the imports, and also that basically was set off by the some of the lower performance in the export sector, exports goods and for goods sector. The flexible exchange rate policy that now is recognized by the CBA as complemented, as I said earlier, for an FIT framework. So consequent to the large depreciation we all saw that recorded in 2022, Sri Lanka rupee has now shown stability, the rupee recording but I think 12% appreciation in 2023. On the fiscal side, this is an important other macro counterpart of the fiscal policy and financial policies is the fiscal imbalance that we have. This is one of the key sources of imbalance we have seen several decades. And this is a key objective of IMF program to bring down fiscal, address of persistent fiscal imbalances, which is the root cause for the especially debt crisis that government experience, sovereign debt crisis. So government embarked on a revenue-based fiscal consolidation path alongside with the IMF arrangement. So that with the aim of restoring fiscal sustainability over a medium to long-term basis. So the impact of the fiscal policy reforms has started to reflect in government finances in 2023 in terms of all deficits. There has been notable improvement in, on one hand, the tax collections, revenue collection, as well as some management of expenditure, and also with debt recycling. I think there's a significant improvement. And also this year, last year, government has been able to record a surplus in the primary account compared to expect a small deficit. That's a significant improvement. And also on the other side of the reforms, not only the fiscal, the cost-reflective pricing mechanism, especially in the utility area, especially managed, provided by state-owned business enterprises, mainly CPC and electricity. That's also an important reform that was introduced by the government last year. And also other one is to complete the, as I said earlier, to address the sovereign debt crisis. That's the government successfully completed the domestic debt optimization operation, as you all know. I think somewhere back in August, September last year. And also in relation to external debt restructuring, an agreements in principle was reached with the official credit committee and also with the Exim Bank of China for debt restructuring. At the meantime, good faith negotiations are continuing with other creditors, other commercial creditors, to reach an agreement in principle early as possible within the next couple of months. So then onto the financial sector, that is our responsibility, maintaining stability of the financial sector, which this has been navigating through very challenging conditions in the recent years, especially in 2022 and 2023, gradually improving in 2023, due to some of the issues, fragilities that stemmed from adverse macro-financial developments. As you know, economy was contracting. Obviously, financial sector also felt the impact of that pain through the banking and financial institutions. These conditions warranted the central bank to take a range of policy actions to maintain and strengthen the resilience of the financial sector, both the bank and non-bank financial sector. In addition, a range of structural reforms was introduced alongside with the IMF program, very important structural reforms. I talk about one important one is the financial system. It's mainly the crisis preparedness and management framework, reiterating the central bank's commitment to ensure the stability and integrity of the financial system. On one hand, this is the Banking Sector Special Provision Act, and the also Central Bank Act recognize and empower Central Bank as a macroprudential authority. Both new authority, macroprudential authority, broad macro financial stability, and then to address improve the solution framework. We were able to bring in another what they call Banking Special Provision Act number 17 of 2023. Another new act. It's an important piece of legislation that was introduced for the purpose of defining a resolution authority if needed and resolution powers of the central bank. So we are now ready with all the resolution powers, instruments, and the buffers in case if needed. That would certainly enhance the confidence of the financial system stability. The Act introduced financial safety net mechanisms and new resolution measures to be implemented in consultation with the government. There's an important role, not only the central bank in an event of resolution, government also intervene and support to strengthen and support the banking and the financial system. Act also facilitated the establishment of a separate department within the central bank, what we call exercising resolution authority. Further, Act grants statutory recognition to the deposit insurance scheme. That is most important one for the especially deposit taking institution. The deposit insurance scheme has been strengthened further, and there is a statutory recognition for the deposit insurance scheme now. Also set up a procedure for orderly winding up of a licensed bank if we have to wind up in case of a resolution. The extension of resolution measures which are applicable for licensed banks or licensed finance companies as and when appropriate is also enabled under the Banking Provision Act. Measures were also taken to strengthen the financial and institutional capacity of the Sri Lanka Deposit Insurance Scheme to enhance public confidence in the financial system through the engagement of a concessionary investment project financing mechanism offered by the World Bank through IDA. So World Bank now has supported the Sri Lanka Deposit Insurance Scheme, not only technical assistance but also with funding. For the initiatives were taken to establish backstop funding arrangement for deposit insurance fund with the Minister of Finance as well. So we have a very strong backup from both World Bank and the Minister of Finance for the deposit insurance scheme. That certainly would enhance the confidence of the banking system and protection of depositors' money. Central Bank is also engaged in amending the next step is to amend the existing Banking Act. That is earlier number 30 of 1988. The amendment would further strengthen and streamline the provisions to ensure that provisions thereof are in line with international best practices. Central Bank is also in the process of amending Finance Business Act, which governs non-bank financial institutions, and also Finance Leasing Act, number 56 of 2000. In addition, as you all know, Microfinance and Credit Regulatory Authority Bill has already been presented to the Parliament as debate is going on. And the enactment of this act would help curb what we call unauthorized lending activity, which has also been booming due to the crisis that we have seen last couple of years. Now there's a new Microfinance and Credit Regulatory Authority that will set up a new regulatory authority, not only for deposit taking but also micro lending and all lending activities. Then the licensed financial companies sector, that we continue the reform process. Important ones are the measures undertaken over several years to encourage consolidation of non-bank financial institutions. And we know the consolidation process has been very successful, and we continue in that process. This is expected to strengthen the resilience in times of uncertainty and improve their capacity to absorb economic shocks while continuing to support the credit needs of customers by maintaining sufficient capital. Of course, non-bank finance sector certainly serve a different segment of the market. We want to ensure that that market, the segment also will be provided with necessary credit for their activities to recover after the crisis. So let me now, that's the history last year, and let me focus most important part of monetary policy strategy and policies for 2024 and beyond. First part on the monetary policy strategy and stance, which is important part, most important part for us. As I said earlier, in line with our monetary policy framework, policy actions of the central bank would continue to be directed towards achieving its primary objective of maintaining domestic price stability, while facilitating the economy to reach its potential growth. Monetary policy actions would aim at maintaining CCPI-based headline inflation at 5%, as agreed to the government under the monetary policy framework that we signed last year for next 3 years. Currently, the monetary policy stance remains accommodative. As I already mentioned, we started easing cycle June last year. And the latest reduction of policy interest rates in November 2023, and further easing entered a force in the near term, because we saw that gradually inflation now ticking up because of some of the administrative measures. As a result, we have a small kind of a post at that point, as we announced last time. This should also allow sufficient space for monetary policy transmission to take full effect and to prevent any undue pressures on the economy. So one of the reasons, as I mentioned earlier, interest rates, lending rates have not been coming and not fully, our policy actions have not been fully transmitted into the market lending rates. So we, during a post period, we hope that there will be full transmission, and then we can take stock of where we are in terms of outlook and then take next actions going forward. Obviously, the recent tax and tariff increases would have some supply side pressures on short-term inflation. Obviously, we see some uptick in January inflation. However, since the rise in inflation is due to administrative measures, a change in the course of monetary policy action may not be warranted as inflation expectations remain well anchored. Although underlying inflation demand pressures remain subdued, still we see demand pressures is subdued. The central bank will remain vigilant of any development that could challenge inflation outlook, so that monetary policy action can be proactively taken to ensure that domestic price stability is maintained, which is most important for us. Gradual normalization of market lending rates and improving investor and business sentiments are expected to support the expansion of credit to the private sector that we are seeing, that is picking up from second half of last year. We expect that continue so that economy can reach its growth potential with provision of sufficient credit for the economy to recover in this year as well. However, the central bank is cognizant of possible risks and challenges emanating from both domestic and external environment. So we always mindful about the risks that could emerge. So which could impede partly the perceived recovery in economic activity and also could threaten the price stability. That we take note of all these risks. I think there are some details in the statement. The cessation of monetary financing, which is one important measure that we introduced last year under the new Central Bank Act. The anchoring of inflation expectations and reduction of a risk premium on government securities are expected this year to have a favorable impact over the medium term on the transition of monetary policy action, so that we can come back to normal monetary policy cycle and a regular interest rate cycle, the yield curves. Meanwhile, the outstanding stock of monetary financing that we had, the legacy of large stock of monetary financing held by the central bank, would be gradually unwound without having a significant impact on the market, on the liquidity in the period ahead through the conduct of monetary policy and open market operations as stipulated in the Central Bank Act. While the monetary policy decision by the central bank would continue to be data driven, proactive measures should be taken to ensure that its core objective of achieving and maintaining domestic price stability is succeeded. So that's the key message. The number of monetary policy reviews, so in terms of monetary policy reviews, this year there are going to be only 6 monetary policy reviews for the year. We have reduced to 6 from 8 for us to give sufficient space to collect data, analyze latest information, and look at forward-looking approach, so that we can make much more informed decision once in 2 years, like once in 2 months. Adhering to the central bank's commitment to set an advanced risk calendar for policy announcement, the calendar of policy board meeting days, policy announcement date is announced. So for the year 2024, you can see that document here on the screen, I think. So then next important part is the monetary and fiscal policy coordination that we would hope to strengthen this year, especially with the new Central Bank Act. There's no representation of the Minister of Finance or government in the central bank boards. The Coordination Council, which is a statutory arrangement in the new Act, was established in late 2023, where the Governor and the Secretary of Treasury are meeting at least one quarterly and facilitated detailed deliberations of how the policies of the government and the central bank could impact each other and understand better the fiscal monetary coordination in the absence of permanent representative at the board level. The Coordination Council certainly would meet quarterly to ensure better coordination of fiscal and monetary policies and also financial system stability policies, all 3 policies, because government has a responsibility on financial system stability when it comes to resolution. Central Bank would share information and exchange views on recent macroeconomic developments, outlook and risks with an assessment of the impact on policies with the government on all the monetary policy conditions and fiscal operations. Policy coordination is important in this new framework, as inflation can be affected by supply side factors and also fiscal policy actions. We are seeing recent value-added tax increase, so this has one of impact on inflation, which could be difficult to be addressed by demand management policies of the central bank. So we need supplementary support from the government side in such instances. In such instances, inflation could deviate from the target jointly set by the government and central bank, and thus could lead to a de-anchoring inflation expectation. We want to ensure we are within the inflation target that we have agreed. For this, proactive policy coordination is needed to manage impact of such episodes going forward. And also other important objective of the policy coordination is to enhance macroeconomic policy consistency in the country, both fiscal, monetary and financial sector policies, consistent across all the important sectors. So the next part is the monetary policy communication, which is the most important part, I think, in the monetary policy making in the modern central bank. Communication plays a greater role in monetary policy transmission, effectiveness, and anchoring inflation expectations. Efforts should be taken to improve policy communication to all stakeholders in the economy, including the general public, which is a cornerstone of the new framework. That's why we have much more regular interactions with the public, with the markets, with the parliament, to improve our policy communication. Central Bank, in this regard, there are several measures. One is we will continue to publish what we call monetary policy reports biannually. So this is a new feature under new Act. There are 2 monetary policy reports within the year to better inform the public on the outlook for inflation and real economic growth and the associated risk that, as we see, thereby further improving the transparency and credibility of monetary policy actions. At the same time, views and inputs from external experts and main stakeholders on central bank policies, like what we call a stakeholder engagement committee, we will engage with all the other stakeholders and get their feedback and views in our monetary policy formation. Moreover, efforts will be taken to enhance awareness about monetary policy among the key stakeholders, as mentioned earlier. Plans should be devised to further improve public engagement and to narrow information and communication gaps. I think we know a lot of times, even media talk about there are misinformation and misunderstanding of certain technical aspects. So we are trying to provide more clarity on these things and educate and make aware of the public knowledge of this monetary policy communication. And also great awareness on professional entities and professionals regarding macroeconomic developments, policies, and outlook would be a priority, while the spread of misinformation is expected to be minimized with greater public engagement, awareness, and obviously we welcome many constructive comments, criticism, and also would like to engage with anyone who has different views, so we are willing to have that conversation. Effective and timely communication is expected to assist the central bank in guiding inflation expectations, even during periods of transitory supply-driven inflation pressures like we are going through right now, where the central bank may not have direct control and monetary policy actions would be less useful in arresting such inflation pressures. Policies would be implemented to enhance the visibility of central bank overall communication. So on the implementation of monetary policy, we have a very strong mechanism internally and all with the market participants. Monetary policy implementation is inevitably connected with controlling the short-term interest rates. As you all know, how the instrument is to target short-term interest rates, which represent the marginal cost of funding for financial intermediaries. Main key instrument there is what we call average weighted core money rate, AWCMR, which is the operating target of the current FI FIT framework at appropriate levels consistent with our policy rates. It is expected to strengthen the liquidity forecasting. Other one is the liquidity forecasting, our ability to forecast liquidity. We would hope to strengthen the liquidity forecasting framework this year with a view to supporting effective monetary policy implementation. That's important. Mechanism, the liquidity is important in monetary policy transmission. More importantly, some important change in the implementation, operational, that what we would hope this year, that central bank would consider moving towards a single policy rate mechanism. As you know, instead, what we are having now is existing dual policy rate. We have a SDF and SLF, the two rates, in between there's a middle rate. So we're gradually moving into a much more clarity, give a single rate target, a short-term single rate target. So that is much more clear. So that will be an important change in monetary policy implementation framework this year. With a view to enhancing the effectiveness of monetary policy implementation as well as catering the current and future developments, a user-friendly system for open market operations. So the key instrument that we use mechanism is to engage in open market operations in targeting short-term interest rates that we will introduce with technology user-friendly system for OMOs that will be introduced with a smooth transition to a new auction system by 2025. So this year there will be the improvements in OMO framework so that by 2025 we will have much more smoother OMO operations. Further, an OMO auction, open market auction schedule will be introduced in 2024 that helps create certainty on liquidity management among market participants, that a lot of participants are here. The OMO auction schedule is an indicative calendar published in advance to the participatory institution, PIs, to provide guidance on the days on which OMO auctions are to be conducted, typically to manage money market liquidity by the central bank. So these are much more transparent measure that we are trying to introduce in open market operations and auctions. Central bank also would review existing framework for statutory reserve requirement, what we call SRR, one of the tools available for monetary policy implementation. So we will review the existing framework in line with international best practices under the foreign the flexible implementation target regime. This measure would enhance flexibility for licensed commercial banks in managing reserves and support the payment system while optimizing the usage of SRR as a monetary policy instrument. So that will be much more useful instrument with the revisions. The proposed policy should involve stakeholder consultation, obviously consultation with all the market participants before implementation, with the overarching goal of optimizing the SRR framework for the benefit of broad economy and the financial system. Other important part we are looking at is the over-reliance on central bank facilities by participating institutions. This was a challenge for monetary policy implementation recently, requiring central bank to implement some of the measures that we introduced last year. As the market liquidity conditions indicated a segmentation among PIs, both the surplus and deficit participating institutions have relied heavily on the central bank facilities, requiring the central bank to impose restrictions on the usage of standing facilities by LCBs under the OMO. So that we know there are certain restrictions still going on. Such policies supported reactivating money market activities, which is important for transmission of monetary policy, while compelling banks with large liquidity shortages to introduce internal corrective measures to improve, partly for surplus institution to engage in market provide liquidity market, and also for the other liquidity shortages, institutional liquidity shortages, to introduce internal corrective measures to improve the liquidity issues on the medium to long term basis. The restrictions on the standing facilities have yielded some positive benefits, as we know. That was the purpose of this restriction. Central bank would certainly consider removing such restrictions gradually, while there will be when there will be no active market participation by almost all market participants. So then we have some further strengthening technical infrastructure in monetary policy making. Especially we have what we call the monetary policy, our decision making process would continue to be guided by a technical model, what we call forecasting and policy analysis system, FAS model, which has now we have been using since 2017, which facilitate for us to generate very credible macroeconomic projections, and that also assists monetary decision making and can do a lot of instrument experiments and tools for us to before we make a monetary decision. That has been very useful. And a suite of models also led by quarterly projection model, what you call QPM, which is also currently in use, to be employed to forecast macroeconomic outlook with all key macro variables. And also investigating alternative models and refining existing models on a continuous basis. That our technical staff is engaged in continuously improving our capacity and intellectual capacity of improving the models and ability to forecast. That would allow more accurate forecasting, paving way for comprehensive macroeconomic analysis and data-driven policy formulation. So this all will be data-driven based on that very scientific technical analysis. Modeling and forecasting capabilities should continue to be improved to better support the monetary decision-making process. With the improved modeling and forecasting capabilities, the accuracy of projected parts of inflation and other key macroeconomic variable is expected to improve. So this is very important, our ability to project accurately the key variables. If you can remember, last year, when you talk about based on our models, we would reach inflation single digits by end of 2023. Even a lot of other institutions did not agree. They had their own models, projected different inflation path. Whereas we had the most accurate inflation path for next 12 months, generated by our own models, which has now proven most accurate compared to any other model in the market with all the other institutions. So that's as we continue to improve our ability so that we can make much more the accurate and decision based on more accurate projections going forward. Moreover, improving policy research and fostering healthy research culture within central bank and extending collaborative research with all the institutions that we are working with would also be a priority area, and this year onwards, which would strengthen our policy analysis. Then let me just move into a external sector stability for this year, which is another important pillar of the overall macro stability. The completion of external debt restructuring is the most important part in the external sector stability this year. And the successful continuation of the IMF EBF support program, which is a balance of payment support, is also very important and instrumental in eliminating the prevailing market uncertainties and improving investor confidence on a sustainable basis. It's imperative that Sri Lanka reduces deficit in the external current account as we have done last year, but we would to do it on a more sustainable basis going forward on a very smaller current account deficit on a medium to long-term basis by ensuring the resilience in the export sector to boost merchandise export earnings, amidst expected gradual recovery of import expenditure. Also, we don't want to compress imports. We will gradually relax imports which are needed for the economy to recover and function normally. In addition, the external current account is also expected to be supported by an improved surplus in the trade and services and work remittances. We are seeing that already, as I mentioned earlier. In addition to the efforts to restore macroeconomic stability, considered efforts are imperative to promote and diversify both merchandise exports. It's important is to diversify export base and also export of trade in services to resolve and diversify and address the recurring balance of payment issues that we have been facing in the past. Moreover, sustaining the momentum in worker remittances will be a strong balance of payment support, and attracting non-debt obligatory foreign financial inflows like foreign direct investments and investment into capital markets and portfolio investment would be instrumental in ensuring lasting stability, and also to the banking sector, with the hopefully that we would get better ratings this year. That's the important objective for us to get our sovereign rating improved this year, so that all these medium to long-term inflows, FDIs, portfolio inflows to banking and other institutions would be much stronger this year. That's what we hope this year. Central Bank remains committed to maintain a market-determined and flexible exchange rate when the flows are coming in, going out, it can always happen because it's a very dynamic and open market. So then we need to allow a market determined exchange rate while maintaining, preventing excess volatility. That only way we can do by building up our buffers in terms of our ability to intervene. The power to intervention is our ability to build up our resource. The more resource we have, more resources in case of volatility. So market determined exchange rate would certainly help correct the anti-export bias that prevailed in the past for long periods and undo build up of speculative pressures and subsequent volatility of the exchange rate. We all know in the past exchange rate had been a one-way bet, and there have been a lot of speculation. Now we have been able to address that part. It's no longer one-way bet. It to respond to demand and supply conditions, and then we will intervene to smoothen out any excess volatility. And also in this kind of a market environment, we would also take certain measures to foster deeper and more liquid foreign exchange, domestic foreign exchange market. That's basically run by you, all the market participants in domestic market. That we want very much deeper and liquid foreign exchange market so that any kind of short-term shocks and volatilities, and also provide instruments to hedge exposures for the business that can be provided to the market. There are certain measures. This should be further supported by implementing what we call Forex Global Code in the domestic foreign exchange market this year, providing a common set of guidance to promote a robust, fair and liquid, open and appropriately transparent market, in which market participants could confidently and effectively transact each other at competitive prices that reflect available market information. So that transparency and liquidity and much more fair trading system will be introduced this year. So the rebuilding of external, for all these things, whole idea is to rebuild external buffers, as is one of our key commitments that we have given under the IMF program to build up our resource. Central Bank is obviously committing to rebuild our resource through various means, through market purchases, through other government interventions, and some support for the government from other, like World Bank, IMF. And also for information sharing and monitoring. Now we have another important thing that we have launched is what we call International Transaction Reporting System, ITRS, that I think bankers are very familiar with this system. That was introduced in 2023 to collect data on cross-border transactions and foreign currency transactions daily from the banking system. We have very updated, real-time system now introduced. And we hope that system will provide more very useful information, not only for policy making purposes, but for the market. We would give back that information for market participants as well. Central Bank plans to restore monthly data pertaining to the external current account so that we can generate monthly basis balance of payment, external current account, and also important on trading service sector based on ITRS, which is a new project that will give a lot more accurate information, especially export of services, education, health, all these things. We had some lapses in information, so this will provide much more accurate information. Going forward, all banks are urged to continue to support the development of this ITR system. It's a beneficial win-win situation of both the banks and us, and to ensure coverage, accuracy and timeliness of data so that we have much more updated latest information available to all of us. So now let me deal with financial sector policies, especially banking sector and the other non-bank sector. So in the banking sector, following the gradual recovery of the economy and the expectation of ensuring smooth credit flows to the real sector, Central Bank expects to implement several policy measures in the near term and as well as the medium term, with the view to maintaining and improving, strengthening financial and operational resilience of the banking sector, with the objective of ensuring strong and adequately capitalized licensed bank. Central Bank has developed a roadmap that all of you are part of that. Developed a roadmap for the restructuring and recapitalization of 9 large banks. AQR we have already completed. This seeks to address capital and foreign exchange liquidity shortfalls identified through a diagnostic exercise, not only diagnostic exercise on the historical data, but also forward-looking stress testing based on macrofinancial scenarios and also based on certain scenarios on sovereign debt restructuring. In line with the roadmap, the central bank will require such banks to submit their board-approved recapitalization plans. If is needed, they have to submit those plans in early this year. The government also has allocated budget provisions of 450 billion in the national budget for 2024 through the parliament. In case if we need government support, that will certainly, there's a buffer fund created and allocated by the parliament to cover potential impacts on capital stemming from diagnostic exercise, a forward-looking exercise, and as well as sovereign debt restructuring. The statutory examination of licensed banks are to be intensified in line with the risk-based consolidated supervision framework, while reinforcing continuous surveillance through early warning and monitoring reporting. I think we certainly will strengthen further our examination process by the bank supervision, risk-based consolidated supervision framework. We certainly will strengthen, and you are going to experience that our bank examiners are coming and working with you going forward in a much more stronger independent manner. The legal and regulatory framework of licensed banks is to further strengthen through the proposed amendment to the Banking Act. I think we have already shared at consultation, and this key amendments that will come in the Banking Act are first strengthening minimum licensing requirements. Corporate governance is most important part, corporate governance, shareholder suitability, bank ownership, acquisition and mergers and consolidation also will be part of the new Act. Banking Amendment Bill is expected to be passed in the Parliament in early part of this year. Further, the framework on corporate governance is to be further strengthened to be in line with international best practices and guidelines issued by global regulators, while also factoring in key recommendations included in the Governance Diagnostic Assessment Report published in September 2023. So we all have seen this report on the Governance Diagnostic Assessment Report, which covered large areas in terms of governance diagnostic, and they had also comments on the banking sector and non-bank sector, also in the FIU. So we are taking actions to address all the gaps that has been identified in this report, and those will be addressed this year. The assessment of the fitness and propriety of directors, chief executive officers, and key management personnel of licensed banks are to be strengthened. That's a very important measure this year. Will be strengthened through the granting of approval for persons with relevant qualifications and experience, thereby improving the composition and competencies of the board of directors. I think this is very important for the resilience of the strong banking sector. Particularly this with respect to two state banks, which account for state banks, including the three large banks, account for 48% of the bank sector assets. Central Bank expects to issue guidelines to the Minister of Finance on appointments to the board of directors of such banks. Accordingly, a framework is to be developed to strengthen the governance of state banks, requiring their boards to have majority of independent members, and nominations for board and senior managements to be made by the bank's nomination committees, following open search procedures with clear requirements pertaining to professional experience and ensuring of independence. These are very important reforms that we are looking forward this year, will be implemented this year in the banking sector. In the past, the extensive reliance by the government and state-owned business enterprises on systemically important state-owned banks for funding has posed significant challenges to the stability of the financial system. We all know the legacy issue is that to state bank exposure to the state-owned business enterprises. The central bank is in the process of formulating directions that stipulate prudential limits for large exposures that bank can have for single borrowers and to a group of connected borrowers, including state-owned business enterprises. Against this backdrop, state-owned business enterprises and large corporations may be required to restructure their balance sheets and diversify their source of funds. This is also important, but with the reforms in the other side of these business enterprises, their balance sheets are going to be much more stronger, and they should be able to diversify their funding sources. They should be able to share their, have more competitive businesses for themselves from the banking sector without relying on single large exposures only to state banks. Then we know difficult economic conditions that we had last year and even now. To facilitate the sustainable revival of business affected by recent challenging macroeconomic circumstances, and to ensure the proper handling of increased levels of impaired assets of Licensed Bank, as you know, 13% right now. Central Bank is to issue broad guidelines to give effect to the establishment of a business revival units, which is a key instrument that would help such as SMEs. Business revival units in licensed banks to further strengthen their role in the recovery of businesses, especially small and medium enterprise and corporates. Remember, this is to revival of small, medium and enterprises, while ensuring the bank's ability to recover dues from willful defaulters through pro rata execution. That's a position that we would expect to continue. The contribution of licensed banks and to promote sustainable finance activities will be continuously monitored, while incentive mechanisms will be introduced to licensed banks to promote sustainable and climate finance activities. In fact, it's just to mention earlier my comment on the SME support. In fact, the pro rata execution would certainly help SMEs. If you want to support SMEs, you need to have this kind of a recovery mechanism. Without that, banks would not be willing to lend to good SMEs who deserve more funding and support from the sector. So the other part is a sustainable finance activity. That's a new area that with climate finance, we would encourage the financial institution to promote more sustainable finance activities. So we have been working with all the institutions for some years now. This is expected to be in line with sustainable finance roadmap that we already announced. Further capacity building activities is obviously necessary to support sustainable finance activities of the banking sector in relation to those also to be supported by the central bank. In the medium term, small and mid-sized banks are expected to seek avenues to consolidate by acquiring or merging with suitable financial institutions to create synergies relating to scale, efficiency, and competition and the financial strength. And the central bank is to facilitate such market-driven consolidation process. Existing supervisory capacity that from our side is also to be strengthened by introducing what we call super tech solutions in supervision into the regulatory and supervisory process over the medium term. So we'll bring in technology from our side when it comes to supervision and regulation of the banking sector. Central Bank would continue to closely engage and collaborate with local and international finance sector regulators, not only in Sri Lanka but also we collaborate and sign MOUs, share information with international financial regulators and the Minister of Finance to ensure the soundness of and the resilience of the banking sector. One important additional information is that we are going to have the Financial Stability Board Asia Pacific meeting in Sri Lanka in April, and Sri Lanka and Hong Kong are chairing this year. We are going to host that meeting here in April in Colombo with the participation of regional members of the Financial Stability Board in Sri Lanka. Then we move into non-bank sector outlook and policies. The stability of the non-bank sector, that's an important sector which serves a different kind of a community and different segment of the business. Expect to improve further by implementing what they call phase 2 of the master plan. That phase 1 has already been implemented successfully. Phase 2 of the master plan consolidation of non-bank financial institutions, commencing in 2024 with a view to building strong and stable non-bank financial institution (NBFIs). Further amending the existing regulatory framework to align with current market developments, like the Banking Act, we also will be amending existing regulatory framework to align with current market developments, including amendments to the Finance and Business Act as well. So there has to be amendment to the Finance and Business Act, number 42 of 2011, and also, as I said, Financial Leasing Act of number 56 of 2000. The introduction of revisiting rules and regulations to improve the stability of non-banking sector, while strengthening and supervisory review process are also expected to improve the stability of this sector. Further, Central Bank would support the authorities in establishment and implementation of the regulatory framework under the proposed Microfinance and Credit Regulatory Authority Act. So that in the Parliament, as I said earlier, so Act will create a separate regulatory, but Central Bank will certainly help the government to establish this regulatory authority. The Act, as proposed by the Central Bank, seeks to improve market conduct and consumer protection and include unregulated money lenders within the regulatory purview in addition to licensed microfinance companies. So that we are seeing a lot of noises these days, unregulated money lending and unfair practices and market conduct. The all will be coming under the new regulatory, the Microfinance and Credit Regulatory Authority Act. Once it is passed by the Parliament, we will be supporting the implementation. Then our other important responsibility is on the payment and settlement. This is another important area that we want to do more this year. Central Bank continue to ensure the smooth operations of the payment and settlement systems of the country during 2023 and expects significant growth in digital transactions in 2024. With the view of the development of payment and settlement regulatory framework, Central Bank aims at revising the Payment and Settlement Act number 28 of 2005, that's already in draft, and enacting new PSSA, Payment and Settlement System Act, in 2025. So there's another act that will be enacted in 2025. We are working, drafting that. This is to facilitate the rapid expansion of payment innovations. Everywhere this has been developed much faster than Sri Lanka. We have been lagging behind. We want to catch up, and that will certainly improve efficiency, productivity, and make it easier for businesses. This is an important initiative. We want to expedite this process this year. Further, Central Bank expects to revise regulations to support the expansion of digital payments and to revise the existing regulatory sandbox framework to facilitate more fintechs entering the regulatory sandbox. That's encourage fintechs to bring in new innovations and solutions. To promote digital transactions and remittances via e-money services, the value limits of enhanced e-money accounts and basic e-money accounts were increased with effect from 1st of January. So that's with the intention. We already increased the values limits on these e-money accounts. Further, Lanka QR would be extended because this has been there for some time, but has not been very effective. But this time, Lanka QR would be extended to enable the use through foreign payment apps, so that both the local customers and foreigners may utilize Lanka QR for payments in Sri Lanka. That's why we are working with UPay in India also and some other arrangements, so that those will be implemented soon. Then the improving consumer relations, that's the important part when we look at difficult economic conditions. The complaints we are getting of market conduct and consumer protection has been increasing. So we are taking certain actions. Central Bank seeks to engage in implementing key regulatory measures as outlined in the what we call Financial Consumer Protection Regulation number 1 of 2023, that last year we brought in this new regulation, and market conduct supervision focusing on financial consumer protection activities of regulated financial institutions coming under the purview of the Central Bank. So that's our responsibility now. The implementation of financial consumer protection and protection regulation is a pivotal endeavor aimed at strengthening financial consumer protection in line with international best practices and facilitating effective financial inclusion through the country. That's also part of our responsibility, and also it's important for your businesses also to have much more transparency and fair market practices. So there will be a more strong regulatory framework for that as well. So in addition, there are certain other areas that Central Bank policies to strengthen the broad economy in addition to the co-function that I just explained, monetary policy, financial stability, banking sector, payment system, and banking sector, we also have few co-functions. First one, this public debt management, as you all know. Central Bank plays a significant role in the management of public debt through effective collaboration with the government to ensure that monetary and fiscal policies are well coordinated to promote macroeconomic stability and sustainable public finance. So that's a key objective of the public debt management. We still have the responsibility with the Central Bank. Following the completion of the DDA program in domestic debt optimization in 2023, several initiatives are expected to be carried out in 2024 aimed at enhancing debt management and transparency. So that's measures are continuing. Importantly, facilitating the external debt restructuring is the next important step by engaging with relevant stakeholders that will continue to contribute to the restoration of sovereign debt sustainability. And also the new initiative, as you already announced in the new Central Bank Act, the Central Bank would also assist Minister of Finance in establishing what they call Public Debt Management Agency, PDMA. The new institution under new law will be established under the Minister of Finance that will take all the public debt operations, management operations, both external and domestic. The proposed PDMA, Public Debt Management Agency, which is to be formed under the Minister of Finance, is expected to be the sole authority responsible for the management of the public debt in the country. In this regard, the Public Debt Management Act is expected to be enacted by March 2024, leading to the establishment of the institution PDMA, which is expected to be operationalized at least by December this year, which means from 2025 onwards, the new agency will be fully operationalized. That's the timeline of the establishment of this Public Debt Authority, Independent Public Debt Authority under Ministry of Finance. So other agency function, we are dealing with the foreign exchange management, what we call Foreign Exchange Act, earlier Exchange Control Act. In terms of foreign exchange management, the Central Bank will continue to introduce and implement proactive and timely policy measures by way of regulations, orders, directions under the provisions of the Foreign Exchange Act number 12 of 2017. And this is one area I know bankers have a lot of issues, clarifications, complications, and we also get a lot of complaints and exemptions asked, all these things. Because of the complicated regulation that we had to impose during difficult times, we are now gradually relaxing all these things and try to make it easier and more clarity in all these rules and regulations. These policy measures are expected to further promote foreign exchange inflows to the country while addressing stakeholder concerns that we are getting on the daily basis, regular basis, and regulating the domestic foreign exchange market and strengthening the surveillance of foreign exchange inflows and outflows. As you know, the new system with Foreign Exchange Department has much stronger information flow to customs, to banks, and also other sources. With the observed improvement in the liquidity position of the domestic foreign exchange market, Central Bank would review the existing restriction, as I said earlier, on certain capital foreign exchange outflows on a priority basis so that people can grow their businesses, with the view to gradually unwinding this restriction in order to do businesses much more freely. Further, there has been an initiative by the government with our advice. The required amendments to the existing Foreign Exchange Act are expected to be finalized and brought in place during early 2024. We have already given our feedback and also our inputs for necessary amendments to the existing Act, which will provide the necessary framework to regulate the functioning of formal foreign exchange market much more effectively. So next important function we are having is a financial intelligence, FIU. There are a lot of changes going on, and you all are stakeholders of that FIU activity for whole country. It's an important agenda. Why this is important? This is most important because Sri Lanka's third mutual evaluation on anti-money laundering and countering the financial terrorism framework, coordinated by the Asia Pacific Group on Money Laundering (APG), is scheduled to commence in March 2025 to assess the country's measures to combat money laundering and terrorist financing. You all can remember back in, I think, 2018-19, we were grey listed after one of the assessments. So we don't want to go back to that kind of situation. That's why we need to work harder up to this assessment on a continuous basis to maintain our credibility and integrity of our systems in terms of preventing anti-money laundering and countering financing terrorism activities. Following the recent conclusion of 2021 and 2022 that we have conducted what we call National Risk Assessment on Money Laundering and Terrorist Financing, several gaps and deficiencies in Sri Lanka AML safety framework have been identified. In this regard, the Cabinet of Ministers approved the institution-wise action plans that was done last year, outlining actions to rectify the remaining gaps. These actions have already been communicated to respective stakeholders. It's a much broader stakeholder involvement here. It's not only the central bank, not only the banking community, not only the financial sector, but much broader national gem and jewelry, casinos, legal departments, the judiciary, the AG office, the Ministry of Justice, Ministry of Company Registrar, Land Registry, revenue agencies, all in all. Much broader stakeholder engagement is essential and necessary, and their support for this. All stakeholders have been given action plan. Also, we are working with them for effective implementation to meet the what they call global recommendation of AML safety by 2025, early 2025. For that purpose, AML safety task force is to be established this month, with the FIU serving as a secretariat of this task. So the FIU is playing an important role as a secretariat of this function. Task force is to be empowered with the oversight of these institution-wise action plans and is to operate until the successful completion of mutual evaluation in July 2026. So it's starting in early 2025 and will continue the evaluation process almost more than a year. That's where we have to show the effectiveness and of this process. The FIU is in the process of introducing amendments. This is one of the areas that we are responsible here at FIU. Introducing amendments to the three main pieces of legislation on AML CFT: Financial Transaction Reporting Act number 6 of 2006 and Convention on the Suppression of Terrorist Financing Act number 25 of 2005 to further strengthen the legal framework in line with international standards. At the request of the FIU, Sri Lanka Police also supporting us strongly, established a special unit to investigate diverse scams, prohibited pyramid schemes, and unauthorized deposit-taking activities, also part of this FIU activity. Together with police, now we have separate units established here with the senior DIG heading the unit. The FIU would continue to identify various unlawful activities that would come in different forms and alert relevant authorities. That's a very important area that I want to share with all of you. Then our other important activity is regional development. As you know earlier, we have been playing a role in regional development under the early act, but then under the new Central Bank Act, the primary focus of regional development shifted from providing financial accommodation through intermediaries that you all familiar, providing loans to SMEs, MSMEs, promoting. That has now shifted to promoting financial inclusion in Sri Lanka. That's now our responsibility. Central Bank is responsible for financial inclusion in Sri Lanka, promoting financial inclusion, reflecting a broader realization of the necessity of building a more inclusive and sustainable finance system. I think that is important one, because we know all the time Sri Lanka is very high literacy, basic literacy is very high, but financial literacy is very poor in this country. Still, I think, based on recent survey, only 55% has financial literate compared to 95% of basic literacy in Sri Lanka. So that we have what they call another strategy, National Financial Inclusion Strategy Action Plan, that has been a going on process, would be implemented in collaboration with all the stakeholders through governance framework. The phase 1 of the NFIS, National Financial Inclusion Strategy, would be concluded in this year, and phase 2 would be implemented next year, so that we are moving from phase 1 to phase 2 of National Financial Inclusion Strategy. So that two phases would consolidate all the efforts under the unified policy decision to nurture financially literate community in Sri Lanka. Another important part that we are vested with the central bank is the EPF, Employees Provident Fund. As Sri Lanka's largest superannuation fund, with the Central Bank of Sri Lanka being its custodian, the EPF demonstrated robust financial performance during 2023 despite all these challenges, including the economic uncertainties and the impact of DDO on the EPF. But we have been able to manage it quite effectively. Going forward, the EPF is committed to enhancing operational efficiency to deliver efficient and effective services to its stakeholders and the members. EPF is to seek avenues to diversify its investment portfolio to generate a higher risk-adjusted rate of return while ensuring the safety of the members' fund. So finally, I think I have covered a lot of areas. I think it's a little too long, but I think it's very important that issue can go through carefully. There are a lot of roles and responsibilities of all of the stakeholders in different ways in this document, especially for this year, for us to be successful in our journey towards better economic recovery for this from 2024 onwards. So the annual policy statement is a testament to our commitment to the people of Sri Lanka by the Central Bank. Our goal is to create a stable and prosperous economy that benefits all Sri Lankans. We believe that this can be achieved through a combination of sound monetary and financial sector policies, as well as structural reforms that promote economic growth. We recognize that the challenges we face are significant, but we are confident that we can overcome all of them all together. We are committed to working with all stakeholders to ensure that the policies outlined in the annual policy statement 2024 are implemented effectively. We believe that by working together, we can create a brighter future for Sri Lanka. Thank you for your commitment and shared vision for a bright economic future. Finally, the policy statement that we announced today is based on current and expected economic conditions, and as such, any unexpected developments, we never know what will happen in the future. Any unexpected development in economic conditions that could materially change the economic outlook may require necessary and appropriate adjustments. That's always the case that in economic planning and programs, we should be able to adjust ourselves to the conditions that those are not expected, and then we move forward and try to move in the same direction going forward. Thank you very much.
Thank you, sir, for setting the tone for the upcoming year. As you said, this statement serves as a testament to our dedication to learning from the past, adapting to the present, and of course preparing for the future, marked by economic strength and resilience. Ladies and gentlemen, the English version of the annual policy statement is now available online on the Central Bank of Sri Lanka's official website, www.cbsl.gov.lk, under the category Speeches. And also note that the Sinhala and Tamil versions will be made available online soon. So with that being said, I would like to kindly invite the Senior Deputy Governor of the Central Bank of Sri Lanka, Mrs. Yvette Fernando, and Deputy Governor of the Central Bank of Sri Lanka, Mrs. Nilumani Dowlagala, to join Governor at the head table for the Q&A session. But before we begin, ladies and gentlemen, as we open the floor for questions, I kindly request that we focus on topics directly related to the Governor's statement today, to ensure more productive and insightful discussion. If you want to ask a question, please raise your hand, and we have some colleagues here with microphones with them, and we will provide you with a microphone. Before asking a question, please don't forget to introduce yourself. A microphone over there, please.
Hi, my name is Ganeshan Vignaraja. I'm an academic. Governor, I was fascinated by your statement, and congratulations on this amazing turnaround we've had in the economy compared to the crisis a year ago. How do you assess the balance of short-term risks to this outlook and the medium-term risks, domestic as well as international? Thank you.
Thank you, Ganeshan. I think in the detailed statement, I think I did not elaborate in detail of the possible risk, both external and domestic, that we might face so going forward. I think key message here is that while we are having kind of a flexibility in our program, but as I mentioned earlier, so short-term, so domestic risks could emanate from, so this is an election year. If there are going to be a change in the course of policies that we have so far implemented, so that could be a risk. But then we should be ready to come up with relevant policy. For example, now, as I said, central bank has much more autonomous in policy making. I think we should be able to form our policies independently to a situation if there are risks. For us, the risks are basically if there are inflation risks. Short term that is coming from what we see, the high taxes short term. So we have already factored those things in. But going forward on the external side, there could be a lot of things that if you look back last year, no one expected this kind of escalation of this earlier Russian, so then Middle East, this thing, and then Red Sea. All these things can, all the time, there could be this kind of risk. But what's important is that for us to understand those risks and get ready and prepare and create, I think important one is to create buffers. So our important lesson that we learned from the crisis is that why we ended up this situation when we were faced with those kind of external domestic shocks. We ran out of, used up all the buffers we had. So we were at the bottom of this thing. And when you don't have a buffer, there's a difference between Sri Lanka and other countries during the crisis period. Countries, for example, a lot of people talk about COVID was the issue, the tax cut was the issue. But ultimately, we could have done all of these things if we had sufficient buffers in terms of foreign reserves, in terms of fiscal space, in terms of monetary space. Once we use all the buffers, we just have no choices. So that's the important one going forward, is to build up the buffers so that any external shock can come and go. But we are ready to use up, even financial sector. That's why we are asking banks to build up their buffers in terms of the capital buffers, all these things, so that you can utilize in terms of a crisis, in terms of shock. The other one is the governance. So basically, the improving governance of such institutions, both central bank and the banking sector. This is Professor Lakshman.
Governor, I am Lakshman Vattivela. First of all, let me congratulate you on this excellent performance in 2023, and also the very positive and also very constructive plan for 2024. I think there were a lot of changes that had taken place, which has really resulted in this achievement of the successes. First thing is the independence. You see the independence given to the central bank, and which I think is something for the whole government, because we have seen very excellent results from the central bank, from their independence. In fact, you had asked the government nominee also to go out, which IMF has recommended, which I think has really resulted in independence of a government organization. So I think this should be followed by the government, not only in your organization, but in all organizations, including, I know that the state banks are here, including them. So let me congratulate you on that. I think one of the more important things you mentioned is on inflation. Let me again congratulate you from bringing the inflation from 70% to 1%. Of course, now it's gone to 5%. Now on inflation, I think I must also congratulate all your staff. You have a knowledge hub, which I do not think any of the government agencies have got. They are really struggling. and the poor performance of these government organizations are really that they do not have the proper people. All the knowledgeable people are leaving the country. So this is also another matter I think that you should discuss with the IMF and ensure that we have the technical and knowledgeable staff in this country who will really be able to rebuild, and that has happened to you. Now the important thing on inflation is the cost reflective pricing formula. You see, I think IMF idea of pricing is different to the pricing that is existing in Sri Lanka. IMF pricing is a very efficient and also productive pricing to give the least cost to the consumer. But unfortunately, our pricing includes wastages, inefficiencies, where production is very low. So every time, maybe first time we can give an increase, but second, third time, I do not think that we can accept that sort of increase. So I would like the central bank to work with these people, because otherwise you will never be able to maintain your inflation figures. Now, due to the VAT, we have said that it is going up because I suppose the prices are going up. But you see the electricity pricing, you see the first time we can take it. But after that, they must go and cut down their costs. They must show efficiency, like what has been shown by the central bank. Why is the IMF not concentrating on them? They must give productive policies, because the central bank has done it on their own. They have used the local staff, the local knowledgeable staff, the technicians, and other who have done it. So I think this is a very good exercise for the government to follow, because if they really look at the cost of a product, is the proper costing being done? Are they maintaining cost records? Do they know the price of generation of cost of each of the power plants? Because in Sri Lanka, we are used to financial costing. All the costs are included in this financial cost. All the overheads, all the inefficiencies, all the excess stuff. So I think we need to go to this cost reflective pricing on a formula. Let the IMF give the formula to all government departments, including the electricity board, to achieve this. So I think this is something that I thought that I'll bring, but I must say that what you have done is really example you have sent to the whole country, to the whole government, as to what could be achieved by our own people, the knowledgeable people in this country. So I'm sure that you will be able to, with the IMF and also with the finance ministry and others, ensure that we will be able to achieve the same success that you have achieved with the other institutions. Thank you.
Thank you very much. I think this is more of a comment and feedback. Thank you very much for this idea. It's very long. I basically agree with what you say. First part is institutional independence, and institutional strengthness is an important one, that what we are seeing in the central bank independence, as well as institution building up. And next one, I think I need to talk about the fiscal side. One is SOE reforms, other one is public financial management bill that will strengthen the policies of those institutions. These are long process, and also obviously for our ability to maintain inflation, the cost effectiveness is important. Not only, I would say, cost effectiveness, but also bringing technology to a lot of areas can improve productivity and bring down the cost of production, and that will certainly help inflation going forward. Those are important reforms, and all the ideas, I would say, are very important. And I understand there are certain measures being considered, especially on the SOE side, where the strong reform agenda is going on, as I understand, and which should certainly cover the cost effectiveness, not only cost recovery pricing, but cost effectiveness, as you said, and also bringing technology in a lot of other areas, in tax collection, all these areas are important ideas. I think I would say technical competency, obviously, we have a lucky central bank. We can train our people, improve their skills, but I think that's a kind of a human resource issue that we have been facing, especially with the crisis in a lot of other government institutions. Hopefully, that should be able to build up for a period of time with technical capabilities and competencies. See another comment, please. Yeah, Riaz, please.
Over there, please. The gentleman over there, please. Is the mic on?
Mic again. There's one here.
This.
Okay,
Governor,
go ahead, please.
Can I ask
Yeah.
one question? I'm Amila from Information Department. As into your point of view, why are the long-term bonds not reacting recent monetary policy easing measures? I mean, like as an example, it is over 2030, it's still over 14%. Like, I don't know, why is that?
Oh, that I think already explained because if you compare the yield curve, where this was compared where it is now, still, that's why I mentioned, still a space for the yield curve to adjust for the shifting downwards. I think that that's why we say we have been kind of during the pause of the monetary policy actions, and we given time to market to adjust market rates by factoring into addressing certain uncertainties, especially external debt restructuring is one of the concern. Once that is completed, I think that process adjustment would be fast. It has been since in all markets, downward adjustment is bit rigid than the upward adjustment in the usual market. So we need to push that through and facilitate and encourage market participants and more liquidity. All these things we will play, and also the other fiscal policies will bring it down. Yeah. Yes.
Governor,
And there's Mike.
another question.
Yeah.
Is there any payments in recent month as to settlement to India and Bangladesh? Oh, I don't know.
That government, I think, will settle all these things. That's the payment to in the line of credit by Minister of Finance. So,
Thank you for that.
if there are schedule, that obviously that payments must be taken place.
Mr. Mula.
Governor, could you explain how the single policy rate will work? Will you establish a dealing desk to deal continuously, and also
We are working on that. We will announce the details once we work out the program. So that we see a lot of there are other central banks; those are having single policy rates. Not only it's not something new.
The FX deepening, how would you go about that? Will you relax the NOPs, and what kind of measures?
Deepening will have to have from both sides, not only the relaxation. I don't think the domestic forex market in short term, not quite sure there are a lot of restrictions right now. Those are restrictions under Foreign Exchange Act on the inflows and outflows. It's not for domestic forex market. Forex market is mainly to facilitate an introduction and more liquidity in the market and encourage banks to engage in interbank market on the basis of market principles, as well as large players like CPC or the large players to come and have business widely and shared between the banks, and remittances business likewise. It's a process. We have seen a much better, more liquid market in the past, even before the crisis. So we want to go there fast.
Mr. Mula.
Governor,
Yes.
my name is Riaz Mila. Congratulations on a very lucid statement. You correctly identified elections as one of the risks that we will face. And you also mentioned that staying to the IMF program is critical for us to come out. My question is, how much leverage does the central bank have in making sure that we stick to the IMF program, whoever comes to power in the elections?
No, I don't think the central bank. So it's up to the country. I think that's. I mean, one of the comments Professor Lakshman made on this institutional independence have benefited not only the government but also the central bank independence is by the whole country, so that they benefit out of this kind of thing. And so whether the IMF program is important, especially because we came into this, we had this debt crisis, sovereign debt crisis, and it's important that sovereign debt levels, the sovereign debt would be restored, the sustainable debt levels. For that, debt restructuring is not a short-term program, it's a longer-term program. So basically, debt restructuring process involves domestic debt restructuring for 10-year period, 10 or longer years, external debt also longer period, which means the creditors who have given us credit would rely on and depend on and assurance from external organization for them to give us a relief for a longer period. For that purpose, that's why IMF is important as a credible external agency that creditors basically have confidence that if they say, okay, country is moving in the right path, then they will continue to support Sri Lanka going forward. If the credible institution independently say we are moving in the wrong direction, then we would most likely lose the support that we need badly for next at least 10 years in terms of relief from our creditors. So that is a binding commitment, not only for the central bank, it's more for the government actually. Not for this government or any successive government. This is essential and important to maintain this support from the creditors for next 10 years to restore the sustainability. The key requirement for that is the assurance from an independent agency like IMF or World Bank saying that we are moving in the right direction. So it's assured that Sri Lanka will be able to meet the obligations that we have committed, even under restructuring terms. So if they say, okay, we are going to move in the different direction, then everyone they can withdraw their support. So we will be back to even worse crisis. So that's why I think it's important to understand the repercussions of losing that assurance of that institution, that not only for us, that give us the assurance to the creditors who have given us the relief. So that's interconnected. I think that's how there are checks and balances. That's how I am confident. I mean, irrespective of the governments coming in the future, let's say next 10 years, they have to rely on this assurance. If it's like a rating agency, like in 2020 onwards, rating agency started downgrading Sri Lanka continuously on a steady basis, ended up at CCC, and then a default category. That's why we lost our access from the creditors. So for us to keep access, we need to move in that direction. I think that's the important thing that, to me, why it is important to stay on track going forward for several years into the future.
Thank you, Governor. Next question, please. Oh, the gentleman over here.
Yeah, I'm Deepal Nelson from President National Chamber of Commerce. So you were talking about supporting SME sector. I just want to know what are the quick support you are going to give us in 2024. And the question number 2 is why we are not having development banks in Sri Lanka. We all know after DFCC there was no development bank, but you mentioned that the support of SME sector. I just would like to know why we are not having development banks to support SME sector. These are the 2 questions, sir.
First of all, I must say both are not central bank responsibilities. So what we can support SME sector is under this thing is financial inclusion, improve financial literacy and awareness of the people, so that they make right investment and consumption decisions, and right credit appraisal and right way of entrepreneurship, so that they can do business. That's through our regulated entities, those are banks. That's why we are pushing the banks to give, that's one of the things that we have said, recovery units of affected SMEs, that give them relief as much as possible, especially when interest rates are coming down, people who can meet their obligations, the feasibility of recovering all these things, banks should be supporting that. That is the one part. And second part, financial literacy inclusion part to support SMEs. But for other two questions, SMEs specifically, I think that's the government responsibility. That's where government is now negotiating a credit facility with Asian Development Bank, with government already announced in the budget. Partly the taxpayers' money is being put, and partly the external funding. Again, this future taxpayers' money is all borrowed money. On a consistent basis, that will also support. And in addition, there are a lot of other reforms. The SME sector is not only credit to me, it's ability to access markets. Have this information for SMEs to convert from domestic business to export markets. And those are there. That's why we have several ministries, several institutions to do that job. I don't think central bank should be getting into those areas. And there are different agencies, as Professor Lakshman Vatal mentioned. Those agencies should also be able to activate support, say, the Export Development Board, Industrial Development Board, and a lot of agencies are there, even Tea Board, Coconut Board, all are there. So different sectors have different segments, and also chambers like yours, and can also work with the government. From a central bank side, that's the thing. And on the development banking, this thing, I think this is, to me, and we all know the situation we had with, like DFCC and DB was set up those days. Those basically, it's all about funding. Those banks were relying on concessional financing that we were getting from external sources like ADB, some of the development agencies, concessional rates, so that they were able to provide long-term financing to certain projects. But once we move into a higher growth per capita incomes, you are losing those concessional access. Any access should be from market base. So I think development financing should also continue from market-based funding. For that, you don't need a social institution to do that. All the banks should be able to provide that financing on a long-term basis by raising financing through the markets. Or this only here and there, ADB can support a scheme, but I don't think that is sufficient. So that's how, I mean, development financing agency is good. Development bank, one bank, to me, one bank is not sufficient. All the banking sector should be able to provide medium to long-term financing by raising necessary financing from the markets. And when they raise money from markets, then they can finance projects only on the basis of feasibility of surviving in the market. But if anyone expects concessions for SME to sustain, that's not going to work. So that's why that's how even if you look at Japan, there's a development bank, but it's all market-based funding, and lending also market-based, borrowing also market-based. So then there's a nice financial intermediate process. I think that's why I think banks and other financial institutions, and in addition, the equity market is raising financing for SMEs is an important part. Capital market can also, it has to be much broad-based. I think if people talk about why can't we have another NDB or DFCC, I think what is the capacity of one small bank having a small line of credit, providing what you need for the economy?
Thank you, sir.
Thank you, Governor. We can perhaps take one more question.
Governor, just over here.
Over.
Governor, you made a comment on the anti-export bias that you've seen in the exchange rate.
Can you please introduce yourself?
Sorry, yes. My name is Chaya. I'm from Frontier Research. The comment you made on the anti-export bias in the exchange rate, traditionally, I would say that would be an overvaluation of the exchange rate. So any comment you can make on what getting rid of an anti-export bias in the exchange rate could mean?
No, that I just mentioned is that because if we intervene and try to suppress the exchange rate, exchange rate is, to me, exchange rate would reflect all the other policies. if we have a stable fiscal policy, stable monetary policy, stable financial system policy, then we will have a stable exchange rate. As a result of all this stability will reflect in the exchange rate. But what happened in the past, we did not have stability in those areas, trying to fix artificially the exchange rate only, thinking that everything will be automatically fixed as exchange rate. That's the wrong policy. That will never work. That's why we had 16 times going to the IMF, trying to fix the exchange rates, maintain stability without fixing other imbalances. That's why it's important. Is anti-export bias is that without addressing the biases and imbalances in other sectors, only fixing exchange rate will never work. It will not sustain. So that's other way around.
In the interest of time, just one last question from that gentleman.
Governor, unfortunately here in Sri Lanka, people get excited about political rhetoric and political slogans. They don't get excited about policy statements of the central bank. I think that's an issue that we all have to face. So my question is, how seriously do you want Sri Lankan political parties to take your policy statement 2024 when they are making their election manifestos? Thank you.
No, we are making policy statements for the general public.
When they are making their election manifestos, how seriously do you want?
I don't think we are targeting anything to political parties. It's, political parties is a formation of public, different groups of public forming different political parties. So what's important is a public understanding, and the political parties are representative of different groups of public. If public understand properly, they will tell their representatives, this is what we want. And then that's how it works in any country. If you are trying to educate only a group of people, then it won't work unless it's broadly accepted. This is where your role as a media is to take this message thoroughly through all stakeholders, mainly to the larger public, so that if they understand, and then that's what political parties are representatives of public.
Okay, so let's call it a close. Thank you all for your engaging and thoughtful questions. Okay, one last question.
First, thank you, Governor.
ඊයේ මේ ජාතික පුවත්පතක අධිකරණ ඇමතුමාගේ අදහස් පළ වෙලා තිබුණා. එතුමා මේ මහ බැංකුව සම්බන්ධයෙන් බරපතල විවේචන ඉදිරිපත් කළා තිබුණා. එතුමා පරාටේ නීතිය සම්බන්ධයෙන් අදහස් පළ කළා තිබ්බා. මේ නීතිය යල්පැන ගිය සහ ආර්ථිකයට අනර්ථකාරී නීතියක් බවත් ඒකේ දෝෂ සහගත තත්ත්වයන් ගණනාවක් එතුමා ප්‍රකාශයට පත් කළා තිබුණා. මම හිතන්නේ මහ බැංකුවේත් ඒ ගැන අවධානය යොමු වෙලා තියෙනවාද කියලා අපි දන්නේ නැහැ. ඒ ගැනත් අපි විමසන්න කැමතියි. ඒ වගේම එතුමා අහලා තිබ්බා මේ ඇතැම් බැංකු හිතාමතාම ණයකරුවන් බිඳවට්ටවලා ඔවුන්ගේ දේපල සාහසික ලෙස අත්පත් කරගෙන ගැනීම පිළිබඳව කරලා තියෙන පැමිණිලි මහ බැංකුව විමර්ශනය කරලා තියෙනවාද කියලා එතුමා ප්‍රශ්න කරලා තිබ්බා. රටේ අධිකරණ ඇමතුමා නිසා තමයි ඒ ගැන ඔබතුමාගේ අවධානයට යොමු කරන්නේ.
අවධානය යොමු කරගන්න ස්තුතියි. සාමාන්‍යයෙන් අපි මහ බැංකුව විදියට මෙහෙම අහවලා කියපු නිසා අපි ඒකට උත්තර දෙනවා කියලා කරන්නේ නැහැ සාමාන්‍යයෙන්. නමුත් ඔය පරාටේ නීතිය ගැන පැහැදිලිවම අතන ඔබතුමාත් හිටියේ ඉස්සරේ පැහැදිලිව මහ බැංකුවේ අදහස ප්‍රකාශ කරා ඇයි පරාටේ නීතිය අවශ්‍ය නැහැ කියලා. මට ඒක ආයෙත් රිපීට් කරන්න අවශ්‍ය නැහැ. විශේෂයෙන් ශ්‍රී ලංකා බැංකර්ස් ඇසෝසියේෂන් එක ඉතාම පැහැදිලි විස්තර කරලා තිබුණා ඇයි මේ ණය සිතාමතා පැහැර අරගෙන අය කරගත යුත්තේ. අනිත් එක ණය අවශ්‍ය ස්මෝල් ඇන්ඩ් SME අයට ණය අවශ්‍ය ණය දෙන්න හැකි වෙන්නේ ඒක තිබීම තුලින් කියන එක කියලා පැහැදිලිව ඒක මම හිතන්නේ තාම පැහැදිලි මුළු රටේම අයට. ඉතින් ඒ ගැන ඔබතුමාට සැකයක් තියෙනවා නම් ඒ කියන ප්‍රශ්න ගැන ඕන ප්‍රශ්නයක් අහන්න පැහැදිලි කරන්න. නමුත් අර කවුරු හරි කෙනෙක් සාමාන්‍යයෙන් මෙහෙම අහුව නිසා මේකට උත්තර දෙනවා කියන එක මහ බැංකුව විදියට මම හිතන්නේ දුදුසු නෑ. නමුත් ඔබතුමා හිතනවා මේකේ අඩුපාඩුවක් තියෙනවා කියලා අපි කරපු ප්‍රකාශය. එහෙම නැත්නම් ඒ කියන තර්කේ එකක් තියෙනවා නම් මට ඒකට උත්තර දෙන්න පුළුවන්.
අධිපතිතුමා කියන්නේ පරාටේ නීතියේ මේ යම්කිසි නීතිමය තත්වයක සංශෝධන අවශ්‍ය වෙන්න පුළුවන් කාලානුරූපව එතකොට පරාටය නීතියේ තියෙන යම් යම් සංශෝධනීය විය යුතු දේවල් පිළිබඳව මහ බැංකුවේ අවධානය යොමු වෙලා තියෙනවද? ඒ කියන්නේ අත් වශයෙන්ම මේ තැන්පතුකරුවන්ගේ ආරක්ෂාව සඳහා පරාටය නීතිය අත්‍යවශ්‍යයි. ඒකේ සැකයක් නැහැ. හැබැයි ඇතැම් අවස්ථාවලදී ඔය ණය ගත්ත අයගේ දේපල සාහසික ලෙස බැංකු අත්පත් කරගන්න තියෙනවා කියලා පැමිණිලි තියෙනවා. ඒ සම්බන්ධයෙන් මහ බැංකුව යම් කිසි විමර්ශනයක් කරලා තියෙනවද? අවධානය යොමු වෙලා තියෙනවද?
මහ බැංකුවේ ඇත්ත වශයෙන්ම තියෙනවා අපි කිව්වේ ෆයිනෑන්ෂල් කන්සියුමර් රිලේෂන් ඩිපාර්ට්මන්ට් කියන එකට ඔය සියලුම පැමිණිලි දිනපතා ලැබෙනවා. ඒ ලැබුණාම අපි ඒක හරහා සියලුම බැංකු වලට දැනුම් දෙනවා. මේ එන පැමිණිල්ල ගැන ඒක වාර්තා කරන්න, ඒක zoom කරනවා, ඊට පස්සේ ඒකට පසුවිපරමුත් කරනවා. එතකොට විශේෂයෙන් අපි කියන්නේ මම ඉස්සෙල් කිව්වා වගේ යම් කිසි කෙනෙක්ගේ ණය ගෙවා ගන්න හැකියාවක් නොමැති නම් ඒකෙදි එයා ගෙවා ගන්න හැකියාවක් බාට පත් කරන්න පුළුවන් නම් ඒක ණය ප්‍රතිගත කරලා ගෙවීමේ හැකියාව වර්ධනය කළ රිකවරි යුනිට්ස් කියලා කියන අද මේ වාර්තාවේ කියලා තියෙන එක. ඒක තමයි ඒකේ පර්පස් එක. හැබැයි ණය යම් කිසි ආකාරයක මොනම හේතුවක් නිසාවත් ණය ගත්ත කෙනෙක්ට ණය ගෙවන්න බැරි නම් ඒවා ගෙවා ගන්න ප්‍රතිවිගත කරත් ගෙවන්න බැරියයි කියලා තියෙනවා නම් මොකද්ද විය යුතු විසඳුම? ඒක ඊළඟ ප්‍රශ්නේ. මොකද ඒ දීලා තියෙන්නේ තැන්පත් කරවන්ගේ මුදල් වලින් තමයි ණය දීලා තියෙන්නේ. ණය අය කර ගැනීම නොහැකි කියලා විවිධ හේතු තියෙන්න පුළුවන්. පැහැදිලි නම් ණය අය කර ගැනීම නොහැකි නම් යම් කිසි ආකාරයක ඒ නීතිමය ක්‍රියාත්මක යටතේ අය කර ගැනීමේ වගකීම තියෙනවා බැංකු පද්ධතියේ හැමෝටම ඒ තැන්පත් කරවන්න වෙනුවෙන්. ඉතින් ඔය පරාට නීතියේ යම් කිසි සංශෝධන තියෙනවා වගේ කරන එකේ අපේ කිසි බාධාවක් නැහැ ඒකට. නමුත් මේකේ අය කර ගැනීමේ හැකියාව දුර්වල කරන්න විශේෂයෙන් ණය ගෙවීමට නොහැකි අය කර ගැනීම නොහැකි දේ අය කර ගැනීමට ක්‍රමයක් තියෙනවා. ඒක අපි මම හිතන්නේ මේක යල්පැනගේ නීතියක් කියලා කිව්වට අපි හැමෝම දන්නවා මේ ඕනම ඇඩ්වාන්ස් ඉකොනොමි එකක වුණත් මෝගේජ් කියන්නේ තාම බැංකු පද්ධතියේ තියෙන ලොකුම බිස්නස් එක. මෝගේජ් එකේ ලෝන් එක මාස වාරික 3ක් ගෙවෙන තුනම බැංකුව එක වෙනදේශ කරලා ප්‍රොපර්ටි එක අරගෙන වෙන කෙනෙක්ට දෙනවා ඒක කරගෙන යන්න. එතකොට අයිති ගෙවන්න බැරි කෙනාට කොටසක් බෙදලා ඒ ඉතුරු ටික බැංකුව අය කරගෙන ඉතුරු ටික කරා. ඒක පරාටේ නීතියම කියලා නෙවෙයි ඊටත් වඩා ශක්තිමත් ක්‍රමවේද තියෙනවා ණය කරගැනීමේ ලෝකේ පුරාම. ලංකාව විතර නෙවෙයි ඉන්දියාවේද පාකිස්තානේද ඕනම රටක තියෙන ක්‍රමය. අපේ තියෙන නමත් දාගෙන තිබුණාට පරාට නීතිය නම් මේකේ තියෙන අය කරගත නොහැකි ණය කරගැනීමේ ක්‍රමවේදයක් තිබිය යුතුයි ෆයිනෑන්ෂල් මේ තියෙන මුල්ල පද්ධතිය සාර්ථකව කටයුතු කිරීමට නම්. එහෙම නොතිබුණොත් මුල්ල පද්ධතිය ඔබ හැමෝගෙම තැන්පත් කරුවාගේ මුදලුත් පාවිච්චි කළ නැවත ණය දීලා අය කරගන්න අවශ්‍යයට SME ණය දෙන්න ක්‍රමයක් නැහැ. ඒ තියෙන ක්‍රමයේදී අඩුපාඩු තියෙනවා. මේක ණය අය කරගත නොහැකි ණය අය කරගත හැමීමේ සාධාරණ ක්‍රමවේදයක් තියෙනවා. ඒක වැරදි විදියට කරනවා නම් ඒ ගැන කරන්න තියෙනවා FCRD කියලා ඒක අපි අර දැන් කිව්වේ රෙගුලේෂන් එකක් ඉෂු කරලා තියෙනවා. ඒ අනුව කම්ප්ලේන්ට් කරන්න පුළුවන්. එතකොට ඒක අනුව අපි කියලා තියෙනවා බැංකු වල සහන ලබා දෙන්න කියලා. ඒ තුලින් තමයි ඒක අය කර ගන්න පුළුවන් වෙන්නේ. පුළුවන්කම තියෙනවා නේද? ඒ ඔක්කොම ක්‍රමවේද කරලා අවසානයේදී අර කියන්නේ ලාස්ට් රිසෝට් එක කියලා. දැන් පරාටේ කියන එක වියුත්තේ අවසානම ක්‍රමය අය කර ගන්න බැරි නම් ඒ අවසානම ක්‍රමයක් තියෙන්න ඕනේ යම්කිසි. නැතුනොත් ඒක ක්‍රියාත්මක කරන්න බෑ.
Thank you, Governor. I think there was one gent. That's the last question. We'll close the session with that.
I am UD ආරියරත්න. මට සිංහලෙන් කතා කරන්න ඕන මද ලැන්ග්වේජ්.
පුළුවන්.
කනේ. මම අහන්නේ මම SME සෙක්ටර් එකේ UD ආරියරත්න මම නම හොරණ. මට අවශ්‍යයි දැනගන්න SME සෙක්ටර් එකට ඔබතුමා මොන වගේ පොලිසිද නව මාකටිං වගේ වට ඉදිරිපත් කළා තියෙනවද නව පොලිසි මොනවා හරි 2024 වසරේ සඳහා
මම හිතන්නේ SME සෙක්ටර් ගැන ඒ ප්‍රශ්නම ඉස්සෙල්ලා ඉංග්‍රීසියෙන් අහපු කෙනාට මේ පිළිතුර ලබා දුන්න හේතුව SME සෙක්ටර් එක කියන එකට ප්‍රතිපද සකස් කිරීම මහ බැංකුවේ වගකීම නෙවෙයි. මොකද අපේ වගකීම තියෙන්නේ බැංකු පද්ධතිය හරහා අර ඉස්සෙල්ලා කිව්වා වගේ SME අයට ණය ලබා දීමේ ක්‍රමය පහසු කිරීම. ඒකෙන් තමයි අපි කරන්නේ. අනිත් එක අර මේ ව්‍යාපාර සම්බන්ධව දැනීම financial inclusion financial literacy කියන එක SME පමණ නෙමෙයි මුළු රටේම ඉන්න ඔබ වගේ ඔබතුමා වගේ ඒ ව්‍යාපාරවල යෙදීම නියමිත අයගේ මේ මුල්ල සාක්ෂරතාවය දිනු කිරීම තුළින් තමයි සාර්ථකව SME එකක් හෝ ව්‍යාපාරයක් හෝ තැන්පතක් හෝ consumption investment decision ගන්න පුළුවන් ආකාරයට ඒක තමයි අර national financial inclusion strategy කියලා මේ එක සිංහලෙන් තියෙනවා මේකේ. ඒක තියෙනවා SME sector එකට අදාළව කරන මහ බැංකුවේ සියලුම කටයුතු මොනවද කියන මේකේ විස්තර ඇතුව තියෙනවා.
ඒකට ඇග්‍රිකල්චර් ෆීල්ඩ් එකත් අයිති වෙනවද?
SME කිව්වම මුළු SME වලට ප්‍රධානම අපේ එක තමයි පොලි අනුපාතය බලපාන්නේ. ඒතර SME කියන්නේ ඇග්‍රිකල්චර් විතරක් නෙවෙයි. සම්පූර්ණම ආර්ථිකය මේ ඇතුළත් SME කියන.
Right. Thank you very much. Thank you very much. So we are almost past 12 o'clock. So let's call it a close. Thank you all for the very engaging and thoughtful questions, and many thanks to the governor and the deputy governors for their insightful and thoughtful responses during the Q&A session. So with that.